Hey everyone, welcome back to Corporate Decoder. Today we're diving into a proxy statement from Piedmont Office Realty Trust. Think of it as the corporate version of show and tell, but instead of toys, it's all about voting on important company decisions. And like any good story, there are heroes, villains, and a few plot twists along the way. So what is Piedmont asking its shareholders to vote on? Well, first, they want you to pick 9 people for their board of directors, kind of like choosing your favorite characters for the next season of a TV show. These directors make big decisions about the company's future. The proxy statement gives you a little background on each nominee. For example, Kelly Barrett used to be a big shot at Home Depot. Glenn Cohen is a financial guru from Kimco Realty. Next up, shareholders are asked to say yes or no to keeping Deloitte and Toussel as their accounting firm. It's like double checking the math on your taxes. You want to make sure the numbers add up. Finally, there's a vote on whether to approve the pay packages for the top executives. This vote is advisory, meaning the board doesn't have to listen, but it gives shareholders a chance to voice their opinion on executive compensation. Piedmont emphasizes that the executives' pay is very performance-based. They try to link how well the executives do to the success of the company. So when the company wins, they win too. Digging deeper into the election of directors, the company board is going from 10 to 9 members, so there are some new faces being put forward. One nominee is Deneen Donnelly, a lawyer who used to be a top legal officer at USAA, a Fortune 150 company. Jeffrey Donnelly comes from Diamond Rock Hospitality, and Stephen Lewis was the CEO of a big law firm. Deloitte has been Piedmont's accounting firm since 2018, so they've been keeping the books in order for a while. The company paid Deloitte about $1.7 million for their work last year. On the executive pay front, Piedmont believes their compensation programs are designed to attract talented executives, reward good performance, and align the interests of executives and shareholders. They have practices they do and don't do to ensure they are being fair. They do require shareholder approval in the event a staggered board is ever proposed. They don't offer compensation or incentives that encourage risky behavior that could hurt the company. It breaks down to audit fees of over $1.3 million and tax fees which are around $400,000. Now let's turn to executive compensation. For 2024, here are some high-level figures to get our attention. Despite challenges in the office real estate sector, Piedmont still signed 2.4 million square feet of leases. They also extended the terms on their debt, meaning they won't have to pay it back as quickly. They were a top performer compared to their peers with an approximate 31% returned to 1% return to shareholders for the year. How do these results translate to executive pay? Payouts under the short-term cash incentive plan were calculated to be around 118% of target, which is good news for the executives. The CEO, C. Brent Smith, had a target incentive of just over $1 million. He ended up with $1.2 million based on the year's results. The former Chief Financial and Administrative Officer, Robert Bowers, also came out with $509.59 with $590.59. As for long-term pay, the CEO's target was $3.04 of deferred stock units, which vest or become fully owned over time. The rest was in performance shares tied to the company's performance compared to its peers. Specifically, 60% of the executive's equity award opportunity was tied to the company's total shareholder return over 3 years versus a peer group. Also, there is a minimum 1-year holding period after shares vest. The summary compensation table is always useful for these reports. It helps organize the mess. See, Brent Smith's total compensation was $5.6 million for the year. The numbers for outstanding stock awards tell an interesting story. As of year's end, C. Brent Smith has almost $4 million in value under outstanding awards. The audit committee has primary responsibility for overseeing the technology platform and including cyber risk assessment and management. To identify and assess risks from cybersecurity threats, their enterprise risk management program considers cybersecurity threats alongside other company risks as part of the overall risk assessment process. In addition, they perform an external specific cybersecurity risk assessment every 18 months. Piedmont also talks about its commitment to diversity, training, health and safety, and a vendor code of conduct. It's all about showing they're not just focused on the bottom line, but also on being a responsible corporate citizen. The company wants to reduce emissions by 50% by 2030. There are also some key dates to keep in mind if you have your own proposals to submit for next year's meeting. Mark your calendars. So what are some key takeaways from this proxy statement? First, Piedmont is very concerned about attracting and retaining good people for their leadership team. Second, they're trying to link pay to performance, especially with long-term incentives. And third, they're paying attention to broader issues of cybersecurity and social responsibility. Now, my take. Piedmont's approach to linking executive compensation with long-term company performance seems like a good way to align management's interests with shareholders. With the focus on equity awards and TSR, executives have a real incentive to increase shareholder value. However, the big question is the office real estate market. They were still able to make some money, even though their core FFO decreased significantly over last year. That environment will have to improve before their compensation will really be worth it, or for the value to grow. Overall, Piedmont seems to be navigating a tough real estate landscape with a focus on long-term value creation. But you have to keep a close eye on the market to see if Piedmont can execute their vision in a tough economic environment. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more corporate decoding.